Good morning and welcome to the early bird. And yesterday we were looking at the Dow Jones, the world stock market, which had pretty much the same sort of pattern as this. This is the US markets Wilshire 5,000, so it incorporates a larger group of companies, but it gives us a clear wave count coming down. What I mean by that, the same as we were looking before, we've got that five-wave structure here, as you can see through here, like this here. So once we get that, we'll be looking at an ABC correction to come back up like that, and that's where we are now with that. And once that's complete, then we'll be looking for another five waves down. And just by the by, this is where once we got this leg in place here, this is where we'll be looking to go short, and we'll be looking at the US markets to do that. So if you want to come for that run, it'll be a little bit like this. But over here, if you want to come for that run, then you really need to be prepared and organised to trade something like that, and allocating some funds for that, and as a sort of a bit of a separate account, really, rather than using your one account as a piggy bank and trading here, there, and everywhere with it, because it's not a very organised way to do something. And being organised is the bedrock of being successful. But what I want to talk about here is that this particular structure that we had moving up here, in a normal scenario, we would have the A wave, the B wave, and the C wave like that, and it would be a 5-3-5 wave structure within that structure there. But we've had this five waves up through here, and we've got a corrective pattern in here, and yes, it hasn't pulled back the way that we wanted it to pull back, but it still gives us a corrective pattern here, which would see further upside to this here. So when we look at the Dow Jones in this particular case here, just bear with me, this one here, we can see that the same sort of larger pattern here. We've got this consolidation in through here, and this is what concerns me. I don't have yesterday's price in here, but we're seeing this as corrective here. So we can have this as the A wave, the B wave shoved into here, and then moving up through there. So that's what we're going to have a look at. We're going to explore this bit here, and we'll be looking at that on the medium level through here, because now we have support in here, and it does appear that in this corrective pattern here that there's a couple of ways to count it, but even if we count it simply as an ABC like this, then what we're looking at from here last night is five little waves up through here like that. So if we get a little five like that in that direction, then we'll get a little three here, excuse me there, and then we'll be looking for another five waves up through here. And that's probably in line with what will come out of Europe this weekend in terms of funding and so forth. So that will be that sort of drive there, and we'll be looking further up into, well, you know, the numbers here, I was looking at 1177 to and 11800, but it can go high as the 12 here. So we can see a push up here. Now, so the American markets can push higher, and and they would be based on well, yes, earnings, but also the European problem, finding a solution anyway for this that would drive that. And yes, we would be involved in that as well. But I need to point out that when we have a look at our part of the world over here, when we're looking at, say, the Shenzhen here, which the Chinese market here, you can see that, you know, you don't need to be Einstein. A 5-year-old can tell you that that direction is down through here. There's a lot of selling pressure there. I know that everybody in Australia continues to talk China up, but you know, the reality is that, you know, it's pointing down, and that's the same with the Shanghai market as well. You know, you can see it pointing down like this, and the base metals are following this now, and you know that we've been sort of working on the base metals. So when we're looking at the base metals, in terms of, we track copper in that, and this is copper here. I put it on the 2-hour chart, and looking at the bigger picture here, it's got the same thing here. Do you know what I mean? So, and we are a commodity country, so, you know, we're being pulled between the Asian world, the European and the American world, because we do have a very strong relationship in terms of patterns within our stock market to the to the Singapore market and to the FTSE as well. Very strong business relationships there, and you can see that come out in terms of our patterns. But we've been looking at this pattern come down through here. And last night it really came down quite strong, but we would expect this low to be taken out here. So this is a fourth wave and a fifth wave to come down here. But as you know, with fourth waves, they can get pretty messy. So we could have something like an A and a B and a C and then come down, you know, or we can come straight down from here. So, but either way, one of the things that pops up is that the 300 here being a major trading level, so we are going to see some sort of support here in this market, and that's going to line up with other markets, with gold at 1600, silver at 30, and so forth. So there will be, even though that base metals and precious metals last night took a hammering, and they really went down strong, and that will sort of show up in the front end news. But just be aware that there is support here, and that would be the same for silver as it's moved down to here, and also gold as well as it into the 1600 here, so it's moved down as well. Yeah, just be aware that there is support here, and that should see a bounce in our market. So just bear that in mind when we start talking about our markets, which we'll do in a minute there. So just going into the US markets here, it's been sold off here a bit, but the point is that while this market here is above the 11,500, the markets in the US haven't quite sort of finished now, because they are saving the cash market's also on 11,500 as well, so it's sitting there. This does appear to be a five-wave structure up through here in terms of the 3, the 4 and the 5 here, so we should get an ABC across here. But after that, if it finds support on here, then we need to look further to the upside there. So if I just bring this on another chart here, there we go. So we're considering this here to be a corrective pattern. And if it finds support on here, like we've been talking about, we've watched this come down, this move up and through here, and the idea was to, observe what happens through here, and we just needed some patience and some time for that. And, it's not solid on there yet. It still can come down, but as soon as it takes these highs out through here, we could say that, well, yes, that is support now, and that's moving up through there. So we could say, a trigger past last night's high or 11.6, then it'll be on its way. And if it does do that, then it'll take out these highs here as well. So there would be a good run through there if that was the case, and we need to be aware of that. We have short positions in the market, and they need to be protected. So yeah. Now, on the downside for this, while we're here, we were looking at this as being a wave 1 down and a wave 2 coming back through here. So it can be working lower as well. We just need to use this as support or resistance, and you can see that the 11.4 and the 11.6 are the sort of the top and the bottom of this range now. So we had that as the range. Yep. Then we've had this is the range here, and now we've got this is the range here. So we are narrowing down into this situation here. So and this will be across all markets, and it's going to be a little bit news based as well. So that's the problem in the Elliott count, as I mentioned here in the US markets here. Just bear with me. We can look at the S&P 500. It's the same. All the patterns are the same. So we've got this 5-wave structure down here, and we're looking at this ABC situation here. So that's sort of how it should run, like that. So this little correction that we're having here is a little bit small to be this wave structure here. It doesn't have to go all that way down. It can be like, it can be something like that as well. But it is a little bit small, but it does have the characteristics of being a little corrective pattern here, and that's why that support will be critical at that stage there. So the Elliott thing is looking for a bigger thing down here, and this will be with with our markets as well, and the Australian dollar being exactly the same. All the markets are the same, but we're seeing the lead on the downside come from the base metals and China, and we'll see the European market bring out some positive news, which may already be built into the markets, you know. When we're looking at our market, the ASX 200 here, just bring this back up through here, not that one, this one here. So this, you know, we'd been looking for weakness through here when we came up. We recognised this weakness coming in, and it was a long haul through here, and we had to be really patient. And we've gotten a few short positions in through here, and we've done okay with it. We're doing all the right things. Things just take time, but you can see that this move up through here as being an impulse wave up to here and then getting sort of tied through here. So this correction here now is in 3 waves. So for the people that know Elliott, this can be an A and a B and a C wave here. And if I just bring that up a little bit, so the question is this correction here big enough to satisfy this move up through here? Look, it's rather small in terms of ratio and proportions, but it does satisfy in very minimal way in terms of its size is minimal. Its pattern is also acceptable as an ABC correction. Now, an ABC correction is a 5-3-5 structure, so it's a little bit tricky to work out, but basically there's 5 waves down through here, 3 waves back up, and you can pretty much count the 5 wave structure down here for the C wave, can't you? So we've got that 1, 2, 3, 4, and 5 through here. So it really does satisfy it as an A and a B and a C, and that's what I'm sort of concerned about. Like I mentioned, base metals were really hammered last night, but the point being is that they have reached support levels, so we should see that bounce there. So we don't really want to be sort of lured in on that side of the market just yet. We really need to do the opposite. So what I'm sort of thinking is we should lock in a lot of the profits that we have on the short side today, even get to break even and bring the stops down, or just take the lot out and wait. Now, to see if we get a bounce through here. Trading the SPY obviously is a bit different from trading stock and so forth, but just be aware of that ABC there. And if you're going to go the long side here today, the first place that you work off would be the midpoint here of the 50. So you'll need the 4150 to have support, and then you know that subgroup 2 here is going to be, you know, the problem here at the 72. So you'll need that as support, and then you would obviously need this as supported here. But if this is an ABC correction here, then that top will be taken out, and then we'll be going to 43.50, I'd imagine, the old high up there. So that's yeah, it's important. This also can be a larger bearish structure unfolding as well, and the way that to read that would be in two ways. This would first of all be an A wave to here, a B wave back, and then a C wave down, and the bigger bearish picture would be down for 1, back for 2 of 1 degree, then the smaller degree down for 1 and back for 2 here. So that's also possible as well, because the bounce that we're going to see on copper at $3 is really not going to go very far at all. So and then it's going to go down further. So if we just have a look at that again through here, this move coming down through here, if we take a closer look at that now, because this is really governing sort of our markets here. So what we can see here is we can see that we've got, we'll call this down for 1 and back for 2 here, and this is the third wave down, and which has basically got 5 waves coming into it. It's got another little thing to come down here, but that would be 1, 2, 3, and then this would be, if it was going to go back up from here, it would go back to the 4th wave of 1 lesser degree. So that 318 there would be the likely place for that. After we get the bounce off here. So basically 1, 2, 3, 4, and then 5 down to here. Yeah, so that 5 down to here would give us 5 waves down to this point through here, and then we'll get a bounce back up here anyway. So it's going to get sort of messy down here, but it's not going to go far. This is going to be like a magnet down through here. And the other markets like nickel and aluminium and so forth are the same as well, and the precious metals, silver and gold are there as well. Their wave counts are further down as well, and they're all lining up with everything as well. So we've got down for 1, back for 2, down for 3. So even in here we've got 1, 2, 3, 4, and 5 down to here. So that's probably that in there. So we can see a bounce back to the 4th wave of 1 lesser degree here. So the idea is to, any shorts that you've got in here is to cover them at this stage here, because we'll see a bounce on all the precious metals here. So that can give us the support that we're actually looking for in the ASX 200 here. That's what I'm thinking here. But the trick is that we've got the Asian markets heading to the downside, like I just mentioned, the Shanghai and so forth. So they're very strong to the downside, as you can see, and we're stuck in the middle of that situation. So any long trades that you're going to take, they really need a really good support system sitting on them, because otherwise we'll be going further down through here. Okay, so right, just bear with me here. That's a nice clear of 5 waves on here on the same market on a 30-minute chart. So we can see the 1, the 2, this is what we've been tracking, and then the 1, 2, well, I didn't get that 3, 4 back up through there. That was probably it there. It was it there, actually. So the 4th and the 5th down to here. So that can be the low there. So finding support on the 4150 is really important, and that would also be, we could line that up with the Australian dollar as well. So the Australian dollar here, this is a 4-minute chart, so we're looking at that low there would be looking at this low down through here, because this is on the 30-minute chart there. So working this structure up here on the Australian dollar, you know all the levels, so we'd be looking at, this would be 5 waves up to here in terms of, or basically up for 1, back for 2, and then 5 waves up for the 3rd wave, which would be 1, 2, 3, 4, and 5 for the 3rd wave in here, and then the 4th and the 5th. So what we're seeing here is an A and a B and a C wave into here, and then we'll see it move up from there. But we've got that impulse wave coming up through there. So if you're going to trade this long today, and also especially in the European session as well, what you're looking for here is you're looking for an ABC correction in here. So an ABC correction will be in a 3-wave pattern. So it'll be something like that. See that little guy in there? It'll be something like that, but a bigger version of that in here. So something like an A and a B and a C wave coming in here, and then look for support to the upside there. So don't run in just on the low down here. Wait for make sure you've got something there. So we could get that strong run up in the European markets tonight, coming into that meeting over there. Okay. Okay, the US dollar is the next important aspect here. And we've been looking at this structure coming down through here, and we're pretty much looking at this being a wave 4 in here. And as you can see, this a 3-wave pattern in here, and we've got a 3-wave pattern in here. So we can say that this is corrective, and we should get a new low in here. That's what I'm sort of thinking for a wave 3, a wave 4, and a wave 5 coming down. That wave 4 here, of course, can wave 4s are the most complicated patterns, so that can be there, or it can still be over here further as well in terms of a triangle working out through here, because triangles are 5-wave structures. So they've got 1, 2, this is 3, 4, and 5 here, and then down from that. So we're still looking for one more low to come in here, and that will give us one more high in the euro, which would be about right, because if the euro is going to push up from here, that would be based on the European news coming out from the meeting this weekend, and pretty much buy the rumour, sell the fact, as we mentioned yesterday. So this is also the corrective pattern in here. So we can see this sort of push higher. It would be pushing higher with the S&P 500 and the Dow Jones. They'll all line up there, and the FTSE and so forth. And from here, you know the levels to use from that point there. I've got a smaller chart here. I'm not very organised this morning. I got up late this morning. Here we go. So so the numbers are all the 72s here. They're all coming into play, and that 13772 will be really strong. That's a nice little sort of support on there. Of course, it's going to get messy on the close here this morning, but wait for it to reopen. So once again, we're also looking for 5 waves up through here. So we'll see a correction pattern from that high there into this area here, or we may get it from here. It doesn't really matter, but allow it to play out. Allow this structure up here to be like wave 1, and then some sort of ABC correction in here during the Australian time period here with weaker Asian markets and weaker base metals. So we're looking for support on here. And as you know, when you get support, after we get a correction across here somewhere, then you need to work off support somewhere. And working off support could be in a couple of places, depending on how big the correction is and how far it comes back. But there's a couple of key points here. After you get an A, B, and C correction across here, you'll either get support on the 72 again, or could even be at the midpoint here. So that's what you'd be working off, the midpoint, group 2 here, preferably the 72, and then the 38 here. Now, when you're dealing with the 38, then you're also dealing with group 1 here, the 10, 20, and 30. So you know that you can trade from the 8, 38 to the top of group 1, and then you can exit and then wait for support, because it's pretty much the same most of the time in terms of the group 1 not finding support on here. So you have to wait for it. There will be a correction up here in this case, and then a push up from that there. But you need support on top of subgroup 1 in this case here to go long, and would be gunning up here. This would be a retest of the old highs would be taken out, and we'll be looking, all these old highs would be taken out if correct, because the US dollar index would be making a new low, and would be looking at the 140 as a target point there if it was going to move swiftly, because the markets were satisfied with the results that's come out of the meeting on the weekend. Okay, that's it. So basically, in a bit of a nutshell, we should see we could see the European markets push to the upside, and the US markets would follow on that. This is the S&P 500 here, the same sort of thing. As long as it stays above the 1200 here, then we've got to push to the upside, and the push to the upside would be up for 1, back for 2, up for 3, for pushing to the upside and making new lows, making new highs up here. And this would be seen as an A and a B and a C wave pushing through here, and then pushing higher up through there. This can also be, as I mentioned on the Dow, down for 1, back for 2, down for 1, and back for 2. But it's not really showing us that, if this was going to be down for 1 here, we would have wanted to see a nice deep move coming through here under this here. So it's more likely this is a corrective pattern here, an ABC, and pushing higher from there. So we just need to be a little bit careful on that situation there. So we've got the European markets kind of leading in some positive news, the US markets following. US dollar will be pushing down, euro will be pushing up, and our markets will be sort of lost in transit on that, but the Australian dollar will push up as the US dollar index pushes down. The base metals would be the one that's holding this down, and the one that will be holding it down, it will probably show up through the ASX 200. The other thing is that if we see a strong closing, this is the SPY here, if we see a strong closing on Friday, because the normal cycle is to see the high on Wednesday up here, and or here, and then the Thursday to the downside, volume drying up, selling volume drying up in the Thursday afternoon session, and that would be the normal the buying process, coming in Friday morning and being partially long on Friday morning, and then as the afternoon session picks up, if we closing on higher volume, then we would go in there and and buy again and try and catch that run through on the Monday, and you'd see profit taking on the Tuesday. So that's the game plan. That's why we'd be covering short positions in on the local market. Don't go chasing the material sector for long positions because of the base metals being down, obviously. So they're not the ones that are going to run. Sure, they might bounce back and make a fool of me, but we've got to go with the possibilities. So probably better off looking at the finance sector. And maybe some of the other ones as well, but the materials one will be the weakest out of it. The energy sector will just follow stock. So as we see the oil section here, Woodside sort of copped it yesterday, and it would do. But the oil market will just follow stock. That's what that will do. Even though that we've got a wave count down here that should take us down further. That's our Elliott count coming down much further with this top already being in play here. But we just need to see what happens with the US markets there. Okay, that's really about it. Okay, alrighty. Well, that's it. So good morning and good luck.